Passive income. It sounds like the ultimate dream, right? Making money while you sleep, without clocking in, without trading your precious hours for dollars. For a lot of people, it seems too good to be true. But in the world of finance and investing, passive income is very, very real. And today, I'm going to break down exactly how it works and how you can start building it for yourself, even if you don't have a ton of money to start with. First, let's get one thing straight. Passive income does not mean zero effort. It's not about finding a magic money tree. It means you do the hard work up front. You invest your time, your knowledge, and your money wisely. And then, those assets you've built or bought continue to pay you over time, long after the initial work is done. Instead of you working for money, your money starts working for you. That's the fundamental shift in mindset. Most people trade their time for a paycheck. Investors, on the other hand, buy assets that generate income streams all on their own. So, how do you actually do this? One of the most popular and accessible ways to earn passive income is through dividend investing. When you buy shares of certain established companies, they literally pay you a portion of their profits just for being a shareholder. This payment is called a dividend, and it's usually paid out every quarter. For example, let's say you invest $10,000 into a portfolio of stocks that have an average dividend yield of 4%. You could earn about $400 per year in cash without selling a single share. That money just shows up in your account. But here's where it gets truly powerful. If you take those dividends and reinvest, they're minion. You use them to buy more shares of the same company, you start a snowball effect. Now you own more shares, which means you'll receive even more dividends next quarter. You can use those bigger dividends to buy even more shares. That, my friends, is the magic of compounding. And compounding is the single most powerful force for building wealth over the long term. Now, I know what some of you are thinking. Picking individual stocks, analyzing financial reports, that sounds complicated and risky. And you're right, it can be. But there's a much simpler option. Dividend ETFs. CLE. An ETF, or exchange-traded fund, is like a basket that holds shares of many different companies, all bundled into one single investment. When you buy a share of a dividend ETF, you're instantly diversified across dozens or even hundreds of companies. This drastically lowers your risk compared to betting on just one or two stocks. You don't have to be a stock market genius. You simply invest in the fund and collect the steady income distributions. It's a fantastic way to get started. Another huge source of passive income is real estate. Owning rental properties can generate fantastic monthly cash flow. But let's be real, being a landlord and fixing toilets at 2 in the morning isn't exactly passive. That's where REITs come in. A REIT is a real estate investment trust. Think of it like a stock, but for real estate. REITs own and operate income-producing properties like apartment buildings, office towers, or shopping malls. By law, they have to pay out most of their profits to shareholders as dividends. This gives you consistent income from a portfolio of properties without any of the landlord headaches. You can also earn passive income from interest. This is the oldest form of passive income in the book, JET. You can do this through bonds, high-yield savings accounts, money market funds, or government treasury securities. Generally, these options offer lower returns than stocks, but they provide incredible stability and predictable payments. A lot of smart investors create a balanced portfolio by combining dividend stocks for growth and bonds for steady, reliable income. Now, let's have an honest moment. Building significant passive income takes time. You are not going to invest $1,000 today and retire on a beach next year. That's not how this works. But if you commit to investing consistently, even a small amount, every single month, if you are disciplined about reinvesting all your earnings, and if you have the patience to let it grow, your income streams will begin to snowball. Those small amounts will grow. Compounding will kick into high gear. And over the years, the results can be absolutely life-changing. Passive income in finance isn't about some get-rich-quick scheme. It's a proven strategy for building real, sustainable wealth. B. Move me. Your future self will be incredibly grateful that you did. Thanks for watching, and I'll see you in the next video.